when I was speaking to those brokers was that there was another option of doing a tracker mortgage, which would track the Bank of England base rate. So at the time when I was having that conversations a couple of months ago, things weren't clear about which direction of travel the Bank of England would take. It's now becoming clearer that it's probably not going to be upwards, but there's no guarantees, right? Anything can happen, as the last few years have shown us with the perma crisis that we exist in. But if before I was and we had a debate on a previous pod where it's like, actually, I'd rather have the certainty. But actually, I think this brings this back more into view, because if I've got 3 months left on my window and actually it takes time for these inflationary fears to ease and we're back on the sort of path to a normal global economy, whatever normal means these days, there is a chance that in 6 months' time, rates could be materially lower again, and then 9 months' time, materially lower again. So is there an argument for me to actually have a mortgage that tracks that Bank of England base rate instead? And I could end up paying less over the period of time. And before I was maybe, but probably not. And I'm probably still in that camp. But I think that makes it a more live possibility, just because if I think the trajectory for rates is down now, and it looks like that may be the case, base rate and mortgage rates, then there could be some benefits to be had there. But that's a risk.
This is something we discussed in a previous conversation that we had about your remortgage. And I think it did get fairly robust, let's say. Because I understand the point around it, and I think obviously that there is an element here where the calculations might make sense. But I mean, my real feeling on it is that I would always take the certainty of a fix over the kind of the kind of gamble of a tracker, really, because a worst case scenario for a fix is you take a 2-year fix, especially in your situation now where actually the remortgage that you're being offered is cheaper than what you're currently on. That's deflationary for your finances, for your budget. In the practical terms, it means your costs are going down, which is really good news. So I would personally, just kind of grasp that, rather than let's see how low things can really go here, and let's see what happens. That's just my view.
I tend to agree, and I don't want to be in violent agreement with you here, but I think it is worth raising that as a prospect, because I think, again, we talked before on the previous pod, and I think it's important now. Again, there is this sense that the timing of this is good, because there's still 3 months for those de-inflationary pressures to come in and markets to move and rates to get cheaper. So that's good news, right? But there is a part of me thinking, actually, if we leave it over a 6-month time horizon, could that get even lower? Now, you're remortgaging next year, right? So you're probably sat there thinking, well, this is good. I'm going to benefit fully from that, right? Whereas I, at the moment, are looking at tying into a 2-year fix, which means I'd still have to pay an elevated rate in that scenario over a longer period of time, which is a bit painful. I think the reason why I would err on fixing, and that's the decision that I made, is because if I were on my own, then I can adjust to any financial shocks when it comes to sort of income and things like that. But I've got a wife, 2 kids. We're quite heavily committed into lots of different things when it comes to running a 2.4 children household kind of thing. It's not just, it's a bit of a gamble, and I'm taking a gamble on their behalf as well as my own, and I'm not sure that's something I'm willing to do. The other important thing to mention, actually, though, and this was something that was raised to me when I spoke to the advisor on Santander, was that there are 1-year fixes available. So there's a deal that is slightly more expensive than what I'm paying at the moment, 4.9%. But so that sort of gave me pause for thought. At the time, the situation wasn't as clear that we're perhaps heading towards a resolution in the global economy. That's still 4.9% when I checked yesterday. If that got cheaper, that could be something that I might consider as well, bearing in mind what I've just said to you. So there's a couple of things buzzing around, I think, about potential options there.
Do you know what the real banter outcome would be here, Chris? Is if, sorry, I'm going to go there now because it just came to my head, is if you lock in a 1-year fix right now or at the beginning of July and sign for it, when you come up for your remortgage in a year, I'm also going to be up for a remortgage.
I feel a contest coming on. Who could get the biggest savings?
We're not allowed to do contests, Chris. The regulator doesn't like that. There's no competition on this podcast.
No, of course, sorry. No, absolutely not. Absolutely not.
That would be the funny note, but don't do it. Do what's best for your family finances, please. I just a funny thought that popped into my head there, but
no, I will. And that 4.9% is not tempting at the moment, but the idea of a 1-year fix, that's sort of interesting. And I think it's important to go into all these different directions, because I'm doing a bit of midterm planning here, and a lot of stuff has come off this.